I'm joined now by Rob Goff. He's the head of research and a managing director at Echelon Wealth Partners. Rob, welcome.
Thank you very much for having me on.
You bet. Rob, the esports phenomenon is descending upon us. Tell me about how investors can involve themselves in it and what's the state of the industry right now?
Sure. At this point, it's to an extent an education process. In that, in terms of direct plays on the space in Canada, it is limited. There's enthusiast gaming, and there's also the score. And then the majority of the companies are private. So what we have done with Echelon is to launch a white paper. If you have hours to kill, we have 82 pages for you.
Great.
In that, we try to take what's really, really complex and distill it down into the basic food chain.
Okay.
At the top of the food chain, you have the publishers, the Tencents, the Riot Games. These are the manufacturers, per se, of the games that your kids are playing. So they then are now trying to build up league structures and teams within the leagues as a way of increasing their audience. Like audiences to date, for some of the games, the championship series actually rivaled the Super Bowl.
Really?
So the viewership is out there and just growing.
Wow.
In terms of the actual size of the marketplace, you've got the legacy sports is roughly a $500 billion marketplace. Video gaming is a $150 billion market. Esports specifically, 1.1 billion with a very quick CAGR on that. Now, when we look at this space, we think it's really important for investors to go through the food chain, right? And what's critical here is that the interests are aligned in that the publishers make money off of expanding the audience, right? So they are giving out free games. So they make their money off of in-game purchases. So clearly price and volume. So they want to get more people, more engaged people in their respective games in order to drive their own revenues. So to do that, to build the audience, they are working to build out league structures and teams within that in an effort to build out that audience. Now, you probably watch your esports through Twitch,
Right, yes.
Twitch, it's interesting, it has roughly 76% of the market in terms of providing that platform for gaming enthusiasts to watch their favorite streamer. One of our core calls here with respect to the space is that Amazon, who owns Twitch at 76%, they dominate. YouTube is there with 16.6%, and then you have Microsoft with Mixer, and you have Facebook, and they're both down around 3 and 4%. And this point here is really the battleground for the Titans, right? So you've got Amazon, who no one likes to fight with, but if you're Microsoft, you can't stay below 5%. If you're Facebook, you don't want to stay below 5%. So we see increased competition to get the streamers onto the different streaming platforms. The highest profile one, Ninja.
Right.
The rumors are that he was offered between $50 and $100 million to move over to the Mixer platform.
Right.
The theory being he would pull his audience, his streaming onto that platform, and they would see a return on that money.
And how's that worked out for them so far?
Initially, he had over 2 million people move over. So that is the start of more to come.
Right.
And we are certain that there will be more competition. The question is, to what extent is it the upfront, we will pay you X, or to what extent is it we will pay you a payout ratio of 60% on advertising or merchandising as opposed to a lower rate. So if you're right here as a platform distributing, you want traffic.
Right.
To get traffic, you will entice the streamers to come onto your platform, which brings the audience. This is ultimately a new form of media, and as such, it's a media where advertising is key. So you want to get the audiences up, and you also want to monetize on those audiences. Fortunately, it's very much an over-the-top or a digital transmission or an IP transmission, and this development of the marketplace is coinciding with advertising going to digital distribution. So 2019 was the first year that we'll see over half of advertising placed digitally. And with that, the fastest growing segment would be that which is programmatic digital advertising. So basically, when you go onto a website, information about you is put into an exchange, and people will bid on you. That's how you are getting relevant advertising, and that's how you also bring value to the advertiser.
Sure.
So this move towards digital and programmatic advertising coincides with the build out of esports on a platform that happens to be digital that facilitates in with the programmatic purchasing.
So playing digital programmatic advertisers is a way to play esports.
It would be.
Fantastic.
One of those names would be Acuity Ads, which would be under our coverage.
Sure.
Yes.
We've interviewed Acuity. Okay, and so has that actually materialized as revenue for Acuity Ads at this point?
It is materializing.
I see.
Right. This is still very much early days, but what we're trying to do is to identify the players who are best positioned to leverage on the growth of the audience. Because the product here is really the audience, and the means by which you monetize would be advertising, merchandising, promotion, events.
Wow. So it's a whole new ecosystem that seems to exist in parallel to the real world.
It was interesting. I can remember going back probably 6 years ago, where there was a survey taken of youth, and they asked the youth to assess a value to their virtual friends and their live friends.
Right.
And the value attributed to virtual friends was staggering, and this was 6 years ago. So when you fast forward to esports, where youths or millennials are playing as part of game teams, it really takes it one step further.
Sure. Interesting.
And also on technology there too. The technology is a powerful wave behind this.
Right.
We were talking earlier about that. And basically there, the games themselves that are in the marketplace today versus 3 years ago or 13 years ago are night and day different, very much more immersive, much more dynamic, entertaining for the user of those games. Technology has both enabled greater data throughput, but also broader reach. And when we're looking at the cusp of 5G being introduced, right, that's where everything will go mobile, full coverage, full bandwidth capabilities. There's just a lot of tailwinds or waves behind the growth here in the esports. That's why we're excited.
So 5G adds to the esports equation. Esports fuels the 5G argument as well, I'm assuming. The whole programmatic advertising thing and the individual as nothing more or less than a commodity to be marketed to is intriguing. So essentially it sounds like the way to play esports is to look at all of the sectors upon which our technological universe is now built, and you're going to play it as a subset of those. If an investor wanted to play something that would be more of a pure play on esports itself, I guess then it's limited to like how far down into the ecosystem can you go as an investor to direct investment directly into the esports gaming itself?
Enthusiast gaming would be the one direct play on esports on the marketplace today. It is the primary one. They also have their summit coming up this weekend.
Sure.
Sorry, this is tape, so we'll dump this anyways.
Right.
So enthusiast gaming. Then we also have the Score, where they're involved in esports. They're also very much involved in gambling.
That's right.
And gambling's a whole other dimension.
Right.
Where it's put forward that if the esports today is a $1.1 billion marketplace, that gambling itself could be another $1 billion within 3 years.
Sure.
Associated with esports.
Right. And
the benefit there, of the gambling is both in terms of the incremental revenues associated with gambling, but we started off talking about the audience and the engagement. You put money on the line, you are engaged.
That's right. That's probably the most profound engagement there is. Rob, let's finish off because we've run out of time, but Echelon has a great track record of identifying early stage opportunities, and your most recent publication demonstrates some wins. What are the top picks that you've got in this universe or others at this point?
Sure, thanks. And just to the numbers there, like our firm runs a top pick portfolio, which is give or take 12 names selected by the analysts. We're very fortunate in the third quarter to return 10%. Our year to date is 28%. And just to show that we're not a one hit or 1 year wonder, if you go back to 2017, we're actually at 82% cumulative returns.
Great.
In terms of the names that are relevant to this space, as it happens, we have both Acuity Ads and the Score within the portfolio.
Great. Thanks very much for joining me. I can't wait to have you back. We'll talk to you soon.
Very good, James. Thank you. Cheers.